Hey guys, welcome back. Drip Coach here with Drip and Farm for Property, where we don't trust, we verify, and operate with integrity and transparency. In today's video, we're breaking down a clip from Anthony's podcast with Jordy Visser. Retail is still driving the crypto cycle. It's something that I never actually thought about until he phrased it this way. I honestly thought this cycle was being driven by Wall Street, and that retail, already had its 10 years of claim to fame to Bitcoin. But he brings up some good points, which also echoes some of the sentiment that Raoul Pal was talking about being in this memetic culture where memes are driving adoption. So let's break down this clip and then see how Jordy Visser aligns with it. And if you're not familiar, Jordy Visser is a OG macro investor. He's got about 30 years of Wall Street experience, former president, CIO of Weiss Multi-Strategy Advisors. And he's become a hardcore Bitcoiner since like the 2008 crisis. After that got introduced, and he's been discussing it, jumped on it, believes in self-custody, all that stuff. So he's, got some credibility in the space is really what it boils down to.
When you look at the market today, one of the stories I just can't stop looking at is this whole idea of the retail investor, the self-directed investor. We've seen Open Door. Eric Jackson is a one-man army pulling together a whole bunch of people who think this thing's going much higher. There's obviously an explosion of volume there. Whether it actually goes to $82 or $8 or whatever, it's obvious that there was a trajectory change in that stock. Sydney Sweeney, the ad campaign, I wrote about it this week, I think is everyone's focused on the photos, the videos, the woman, all that kind of stuff. To me, the most interesting part was really simple meme. Sydney Sweeney has great genes, up 20%, hundreds of millions of dollars of value creation, kind of this memetic warfare that really resonates with the self-directed investor. And when you go online, our friends over at Liquidity came out and he said, hey, look at this post on Reddit where somebody literally saw the ad campaign, immediately went and bought, I think it was hundreds of thousands of dollars of shares, and was just like, I understand memes. Like, the meme is going to work. I'm in. Stock price goes up. They make money. It feels like that is driving the market more so than anything else. It really does feel like there has been this sea change. And I don't know if we're at the point where, you ever watched the movie Captain Phillips, where he's like, I'm the captain now, right? And the pirates take over. I don't know if we can say really retail or self-directed investors have taken over, but it feels like they got way more influence. They got way more capital in the market than they did 5 years ago. And so in a weird way, everyone's always talking about like, what's Wall Street doing? I've started to pay more attention to like, what's retail doing? Because they're the ones who actually may be driving the market, and Wall Street is just supercharging what retail is doing by following retail.
So that was, like I said, kind of eye-opening to me, because I just assumed at this stage that once things got regulated, that Wall Street was driving bust now. And it's like retail had their opportunity, AMC, 48 Yacht Club, Apes Together Strong, all that stuff for that meme culture that was definitive during the previous cycle and was making headways with Robinhood and stocks. And there was legislation to, stop these guys from buying stocks, like all sorts. Well, it wasn't legislation, but it was strong arm tactics, put it that way. So I just assumed this cycle, now that legislation had come in, was no longer being driven by retail. But the way Pomp brings this up, it's like retail culture, your TikTok, your memes, your younger individuals, and Jordy Visser is going to go into this as well. They're the ones that are going to catch on to, or not just catch on, but create trends and narratives. And that's what goes viral. Like, viral is, no longer something tied specifically to within the body and causing havoc. It is a positive thing in regards to advertising. Like, that word has changed in the last, decade and some change. So with that, influence spreads, attention spreads, and they may not have the money, but they have the attention and the numbers. And then that drives adoption. Like he just mentioned, there was a Reddit post and somebody saw this Sweeney ad campaign for American Eagle. I think their stock jumped up like 20% or something like that, like you said, off of a 30-second clip. Not going to play the whole clip, but yeah, it's just a typical, attractive model kind of thing. But the meme part, Sydney Sydney Sweeney has great genes. Obviously, a play on words about her genetics and then the jeans she's wearing. It just took off. And that's the thing that Wall Street can't control. It is solely driven by attention. And then this new demographic of the younger investors are 110% aligned with that. Like, I'm out here even in Colombia just watching the younger generation. I saw it in Cambodia as well. It doesn't matter what language they're in, they are just constantly scrolling TikTok, Instagram feeds and liking and sharing and just watching stuff. Like, that's it. And then recreating the things that they like. So if something catches their eye, they're immediately reproducing that and causing that virality. So like Pomp just mentioned, then obviously that means that Wall Street is going to follow that energy.
This has been a big change for a while now, but it really accelerated after 2020. Again, that's when I got involved with crypto because my son had done really well trading it. He was 13 years old and I wanted to understand why. And I thought it was just gambling, but it wasn't. And it was the mindset again of a kid who 2 years later was playing Fortnite all the time and had no interest in baseball because it was boring and it took too long. I think this gets back to the Fed question, which is the Fed able to manage monetary policy in a world where gambling is a big part of PCE and it's a consistent growth period where meme coins are something people invest in that are no different to me than people investing in memorabilia, baseball cards, whatever the case is. You're assuming these things go up, they go down. There's no value attached to them. The value is attached to other people buying them. It's just that it moves faster. So if someone buys a Babe Ruth card and over the course of a decade, it goes higher, then there's all of a sudden a big fall in all baseball cards and the Babe Ruth card falls 50%. Meme coins have a lifespan. It's just shorter than what people would recognize for most of them. And kids' attention span is shorter. So again, when you're using...
So I want to pause there because again, that is super eye-opening. So this is a guy, like I said, 30 years macro experience, and he's seeing what his son is interested in. And then we can tie that into exactly what got Trump into creating crypto legislation. It was his son, and specifically his younger sons. And Barron was the one that got him on podcasts like Joe Rogan. So it's like, yeah, the younger generation can't be ignored in regards to their influence and interests. And like Jordy just mentioned, it's like, yeah, it may be short and fleeting, but if you can capitalize on that, then you can create a wave of opportunity and then ride the next thing. I remember watching a clip on, what's his name? I'm drawing a blank. Deadpool. Ryan Reynolds, how he took, I think he's done like 5 companies now that are completely unrelated to one another. One's like a football team, one was a gin, another was a cell phone, and he was just able to jump on virality of things that were trending, and he was able to make, content on it, on YouTube, for a couple bucks, just him and a cell phone. Of course, he had a little production team or whatever to make it better quality. That was enough to drive brand recognition and generate hype and all that stuff. And that's what he did with the first Deadpool movie. But I'm tying all this back because I did not think of retail this way. And this is just eye-opening to me to see it reflected in this lens and then have a macro guy like this talking about this. And it's like, yeah, these things can't be ignored. So just because you're not part of that culture or not interacting with it doesn't mean that it doesn't have enormous amounts of influence.
We're using too much history and too much thought on what should entertain people. At the end of the day, consumption is about entertainment. And if people find something interesting, like Sydney Sweeney's meme, then it goes viral and then it becomes something real. I mean, we've watched the Kardashians become billionaires. We've watched all this stuff happen over the last, 20 years. I think people just need to accept the fact that what Warren Buffett talks about, I mean, no offense to Warren Buffett, but he has no context for what the Kardashians do or this, and they're billionaires. So the world has been changing for some time. I just think people's attention span and the movements are only going to get shorter and shorter. And that's why I think investing in a company is different than making money through trading. Kids and younger investors are using options on this because the market goes up 83% of the years, guys. And the amount of hedge fund people that talk about bubbles and trying to predict the next crash is off the charts. It goes up 83% of the time. Like, this is just the normal part of life. And they've just said, wow, the odds are in my favor. I make money doing this. I'm going to keep trading it. And when the market goes down and I lose money, I'll just get back up and do something again. Guess what? You've seen crypto people do that for a long time.
Crypto people.
Yep. That is the kind of mic drop piece. It's like, the new generation, they're wired different, they're built different, they're experiencing this. And I've seen it even for myself, like diamond hand shit tokens and cult community projects all the way to nothing because you're just like, oh well, fuck it, I'll just YOLO. So that's only getting worse because of multiple things. Like you said, the interest and influence of social media and YouTube shorts, TikTok shorts, all this kind of stuff has them driven by that. And of course, smartphones and video games and all this stuff. So if you're exposed to this constant dopamine rush chasing the next high from age 5, and all of a sudden now you got a job and you're 25, you're willing to just ride this wave. One, you're younger, you can afford the risk. Two, you've just had all this risk and dopamine like hits your entire life. Three, you're seeing your parents talk about how the economy is going to shit and there's no opportunities for them. And you're like, yeah, well, I'm not gonna work a 9 to 5 job. So like, they're just built different. They just have a different mentality. And you take that and multiply that across the billions of them across the globe in different cultures. It's like, yeah, that well, makes sense now that they would indeed still have some influence as retail, because they just are looking at markets and opportunities and risk totally different. Like he just mentioned, gone are the Warren Buffett days of what's the best bet. We are living in a monetary regime change. We're seeing never before did we have this global free market of Bitcoin. So, I mean, you've only got 2 decades of this technology. I would argue less than 1 decade where it's really proven itself, because the first decade, it was very speculative and was probably definitely more prone to the 51% attack. Now it's so much more decentralized, the hash rate so much higher, the energy to try to attack the network, like the regulation, like now it's safe, so to speak, quote unquote. So before that, it was definitely for, you know, the crypto bros and Reddit threads and all that stuff. So at this stage, it's like, yeah, there's kind of goes back to what I was saying in another video. It's like, you can't continue to evaluate Bitcoin through the lens of the old guard and old information, economic policies and books and all this, because it just doesn't fit. It is completely independent, separate, its own code and framework and belief system and values, like everything. It's just completely separate. So, and it's kind of, again, like Sailor's kind of joke. He's like, yeah, when Godzilla walks on a playground, all bets are off. It's like, okay, you're using old warfare with horses and chariots and bow and arrows, and maybe the musket gets introduced. But if in that era, all of a sudden a B-2 bomber comes on the scene with a fucking nuke, it's like, it doesn't matter what Napoleon's strategy is to invade North or Attila the Hun or anybody, you know, because nukes just destroy horses and chariots and bows and arrows. And that's what Bitcoin is. It's a fucking nuke. It doesn't play by the same rules. And it's so difficult for many of us to, I think, really appreciate the complexity and yet the simplicity of what it's doing to monetary policy, to economic freedom, all this stuff. And the more I dig into it, the more I feel like I understand. But then I guess it's actually the more I realize I don't understand. It's like, oh shit, I just don't have enough. So anyway, yeah, I just wanted to share that. Let me know what you guys think about retail. Like, how do you view that? Do they still have influence? If you filter this through, yeah, what influence actually means and what attention actually means, and how that definitely can drive a sea change of opportunity within this global, new global economy, especially with memes. I'm not a big meme coin chaser, and I'm sure the younger generation is not worried about Bitcoin. They're like, fuck that, I'll make my money on memes. It all ties together. So yeah, let me know what you guys think. Smash that HBO special, help brother out, like, subscribe, comment down below, and until next time, live daily and achieve your possible. See ya.